Good morning and welcome to Stock Market Today for Thursday, May 2nd, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. You can sign up for a free email to follow along with this show. Get daily stock ideas in your inbox for you to consider every trading day before the market opens. So U.S. equities were lower in Wednesday's trading, closing near the lows of the day. Treasuries were mostly weaker with the curve flattening. Dollar was stronger on the euro cross, but little changed against the yen. Gold down 10 basis points and oil was weaker after larger than expected U.S. inventory build led to a drop of about 0.5% for WTI crude. Outperforming groups, REITs, only group to finish higher on the day. Tech, healthcare, and comm services did outperform. Underperformers, energy, materials, consumer staples, and consumer discretionary. And as we get to the desk this morning, futures are up about 30 basis points for the S&P 500 after finishing lower yesterday, reversing earlier gains. Asian markets were mostly higher overnight, but both China and Japan were closed for holiday. European markets are mostly weaker, though Germany is outperforming. Treasuries are weaker, and the dollar is flat against the major crosses. Gold off about 1%, 90 basis points, and WTI crude is off just over, 1%. So as we dive in here, you can see the big reversal yesterday. We're trading at all-time highs and then reversed as the Fed press conference was going on. Commentary about the low level of inflation being transient from Chairman Powell sent stocks lower during the press conference, and they closed near the lows of the day, as we said. Now, support comes into play, 28.90 to 29.10. Then stronger support really comes into play at around the 28.50 level. Resistance remains in and around the 29.40 level. The RSI exits overbought conditions. You can see here we moved out of that level. RSI now at about a 62 reading, but Chaikin money flow does remain bullish. So the indicators are still bullish. Market hits an all-time high, uses the press conference from the Fed as an excuse to sell off and take a little bit off the table here today. We're going to stick with our view. Trend remains higher. Could we get some choppiness in the near term as we work off overbought conditions? Of course we can. Look for those key support levels to continue to hold. That is the time to really start to get aggressive on the long side of the portfolio. Should support hold, you want to be looking for bullish and very bullish stocks, which are outperforming the market, and look for those stocks when they themselves become oversold. Those set up compelling entry points. Now, your market in a minute. What are we chatting about in our note today with Chaikin Analytics clients? Stock fade from highs during the Fed Chairman Powell's press conference. We hit on that already. It was the remarks about the low level of inflation being transient that are being blamed for the sell-off here in U.S. equities at the end of the day yesterday. Long-term breadth metrics remain constructive. Remember, it's Thursday. We do our breadth work on Thursday. And the long-term metrics remain okay. Advanced decline line, percent of stocks above their 200-day moving average remain okay. But short-term measures are showing signs of deterioration, and we'll take a look at that a little bit later in the show. And as I said, futures do point to a higher open here today. Taking a look at our power bars for the major indices, Dow lost nearly 60 basis points yesterday. 9 bulls, that number remains the same, but 3 bears. So slight uptick in the number of bearish stocks for the Dow Jones Industrial Average. Deterioration, as you would expect, in the S&P 500, 136 bullish or very bullish stocks, 62 bears, after that index fell by 74 basis points yesterday. Nasdaq was an outperformer, down 36 basis points, thanks to the nearly 5% move higher in Apple. 22 bullish or very bullish stocks for the Nasdaq, 8 bearish or very bearish stocks there. Small caps, big underperformer, down nearly 1%, 538 bulls, 328 bears. All of the power bar indices power bar ratios for these major indices do remain bullish, though signs of a bit of a deterioration with the sell-off yesterday. Bonds upticked by about 41 basis points. According to the Chaikin Power Bar, large cap stocks and small cap stocks remain bullish. Turning now to our stock of the day. Arconic, ticker symbol ARNC, closed at 2146, down 9 basis points yesterday. Some nice outperformance from this stock in the metals part of the market. Chaikin Power Gauge rating for Arconic is very bullish due to very attractive financial metrics, very positive expert activity, strong earnings performance, and strong price volume activity. So, you know, all of the main categories that we look at that go into our model are bullish or very bullish here. Remember, there are 20 factors that go into the model, 5 in each of these 4 categories. When we roll out with that bullish rating, we have a strong trend, but a weak industry group, right? Metals have come under pressure, especially as the dollar has moved higher. So it's just something to kind of keep in mind. But, you know, stock selection is always important. And Arconic, let's run through the analysis. Ribbon at the bottom of the screen tells us what our power gauge rating is and has been over the past 12 months. And you can see we've been on this bullish or very bullish rating since about the end of February. But at that time, market and model were not in agreement. Stock was underperforming. Now, look what's happening. Stock is beginning to outperform the market. Market and model are getting into gear. Dynamic duo starting to get into agreement. What's interesting to me is that our overbought, oversold indicator is beginning to move higher after failing to reach an oversold condition. That tells me that this underlying trend here off the lows has some momentum. Combine that with the fact that Chaikin money flow is bullish, stock is above a rising long-term trend line and triggered a relative strength breakout signal today. So kind of looks compelling here on the long side of the portfolio. They did announce earnings back on Tuesday. Their reported numbers for the first quarter did beat the street estimates by about 3 cents. So pretty compelling setup here for Arconic, ARNC, on the long side of the portfolio. Take a look at Arconic. Sector tracker. Looking at the major sectors now, how they've been moving. It's very near-term in nature. It's how they've been moving over the last 5 days. So healthcare continues to rebound from those deeply oversold conditions that we cited last week, up a little over 2% over the past 5 days. Financials, getting into gear here as well. Solid earnings from the financial sector, moving that group higher. Real estate and utilities continue to do well after holding above key support levels. Staples and comms round out the groups that are up over the past 5 days. Now, tech has come under some pressure of late. We want to see tech do well. It's the largest weighting in the S&P 500. Industrials giving some back after rebounding and following a test of support. Discretionary down about 1.5%. Materials and energy continue to be the weakest groups, largely, in my opinion, a function of a strengthening U.S. dollar. Strengthening dollar tends to have a negative impact on commodities, which then impacts the commodity-levered parts of the market. So when we think about commodities, we certainly think about energy, we certainly think about materials, and those groups are underperforming as you would expect in an environment where the dollar is strengthening. Now, our industry in focus today comes from the tech group, semiconductor services. 7 bullish or very bullish stocks, 2 bearish or very bearish stocks. Over the past 6 months, group has outperformed the S&P 500 by 18.4%. And that power bar ratio, as I just referenced, is still very strong. 7 bulls to 2 bears. Group is currently ranked towards the middle of the pack, 9 of the 21 subsectors that we track. It has moved up 1 slot over the past week. Some of the indicative names there, Cypress Semiconductor, CY, has a very bullish rating. On Semiconductor, ON, has a bullish rating, and Sun Power, tickers there is SPWR, also with a bullish Chaikin power gauge rating. So let's take a look at Cypress here today. Very bullish stock, strong trend, strong industry group. That's the macro, that's the strategic, that's the type of name you want to consider, especially when it's outperforming the market. Rating turned bullish in late January, early February, coinciding with a beginning to outperform, and the intensity of that outperformance has been picking up of late. So market to model in agreement, dynamic duo in gear. Interesting here as well, last 2 times our overbought, oversold indicator made a trip towards oversold conditions. It never got there. Indicator rounding higher again after failing to reach an oversold condition. Chaikin money flow bullish, stock above the rising long-term trend line. Have some nice support here in the $15, $16 level. Earnings announcement recently saw them beat expectations. So the stock's kind of consolidating here, but I think as long as it's above that 15, 16 mark, it does look pretty compelling on the long side. One thing I would say here is Cypress is very levered to Apple, so something to keep in mind. Apple is a large customer for Cypress. Yesterday's S&P 500 gainers and losers. Royal Caribbean beat earnings, stock higher by 6.7%. Harris also beat estimates, up 6.6%. Neutrally rated stock there, but 3L in the same group, part of the defense complex, up nearly 6.5% following their earnings announcement. Hilton beats and raises 6.45% to the upside, and CVS earnings sent that stock higher by about 5.42%. On the loser side of the board, TAP, Molson Coors, down 7.5% following their earnings miss. CLX down 7.25% following their earnings, but I will note that the stock did catch an upgrade here today. Garmin earnings sent that stock lower by 6.6%, bearish rating there. Sealed Air, down nearly 6% following their earnings announcement and an announcement that they are buying automated packaging systems. CXO, Concho, earnings sent that stock lower, down by about 5.75% there on the day. Earnings update now. Yesterday's surprises: Square beat by 4 cents, stock trading lower. Estee Lauder beat by 1/4. Royal Caribbean, as we said, traded up on the day after they beat by 20 cents. Equinix, EQIX, beats by 79 cents, and CDW beats by 16 cents relative to expectations. Busy day of earnings again before the open. Disca trading higher after the close. CBS, Cognizant, and Fortinet are bullish names that'll be on the radar screen. Pre-market, Under Armour trading higher, neutrally rated stock. Other important names before the market today: ABC, VMC, Dow DuPont, Church & Dwight. After the close, neutral stocks of interest: Skyworks, Activision, Gilead, and Monster. Abiomed trading lower, bearish stock reported this morning, stock trading down. Macerich, bearish name within the real estate group. After the close, RMD, EOG, and FLR will be of interest. Now, long-term breadth measures remain constructive. Here's the percentage of stocks currently above their 200-day moving averages in the S&P 500, and the readings still here around the 70% level. Readings above 60 are a sign that a healthy majority of stocks are trading above their long-term measures of trend, and we can see that that has been in gear with the market. So from a long-term perspective, breadth looks compelling. If we look at the advanced decline line, it's also in gear with the market. So longer-term measures of breadth remain constructive. However, we are noticing short-term metrics flashing negative divergences. Here's the percentage of stocks in the S&P 500 currently trading above their respective 50-day moving averages. And what we can see here is a negative divergence, right? Series of lower highs as the market is trending up. This is, it's not a sell signal, but it's something to keep in mind. We prefer, market and our breadth metrics to be in gear. And right now, we're starting to see some stocks start to trade below their 50-day moving averages. So we'll continue to monitor this situation for signs of breakdowns. If we start to see breakdowns through key support in the indexes, obviously that would start to concern us. Right now, the indexes remain above support, so we stick with our view, but we don't remain dogmatic with our view. We check all of the incoming data and adjust our views accordingly. So right now, this is something that we're keeping an eye on. And what's interesting is if we showed this same chart with the percentage of stocks above their 20-day moving averages, shorter term measure of breadth, we would see the same negative divergence. So just something we're pointing out, something we're keeping an eye on here today. Now, Toll Brothers is a stock of interest, and I wanted to point it out because we often talk about relative strength and finding the stocks that have held up well when the market turns lower. So Toll Brothers, very bullish stock, strong trend, strong industry group, outperforming the market since December. And this line that I've drawn here shows you that as the market was trading into those lows at 23.50 at the end of December, Toll Brothers was actually making higher lows and beginning to outperform. Those are the types of names that end up becoming leaders as the market trends higher. And you can see we've been outperforming really since that early December timeframe. Currently oversold with bullish flow above a rising long-term trend line. That led me to make Toll Brothers my bullish stock of the day in my morning note today. So just a little bit of the process and how I think about things when I'm selecting my stock of the day. We have a few weeks before Toll is set to report earnings, so potential long idea here today. That's going to wrap it up. Head over to ChaikinAnalytics.com/today to sign up for that email. I will see you back here tomorrow. Have a great Thursday, everyone.